Hi guys, and welcome back to the Millennial Wealth Building channel. This video will continue to cover content in the credit card series on this channel. In the previous video, I covered my top picks for student credit cards, with the exception of one pick that I simply mentioned, but not recommended, mainly because it is a popular choice right now, and I wanted to give some of the drawbacks on that credit card. So if you're interested, go ahead and click the comment card above or click the link in the description below to view that video. Now, let's discuss you all smashing that like button, subscribing, hitting that notification bell, and also please make sure that you comment below as you watch this video. I'm very much interested to hear what you all think. Well, I guess read what you all think. Now let's move on to the content of this video. This video will be debunking, annihilating, obliterating, extirpating, exterminating, liquidating. Are there any more synonyms that I can think of to describe what I am about to present? So this video will really look at destroying some of the popular credit card myths out there. Not every single one, but some of the ones that I definitely come across from time to time. So with that said, let's get straight to it. So myth number one, paying your balance in full every month will hurt you. Honestly, I still can't believe that this myth is still floating around there. I remember the first time I heard this was like 10 years ago, and I believed it, and I still hear it to this day in 2020. I recently had someone tell me that you need to make sure that you're carrying a balance on your credit card every single month. That way, the credit card companies can report that, because if you don't have a balance on your credit card when they report that to the credit bureaus, that is going to look negative and it will impact your score negatively. That is absolute baloney. Now, there is a utilization rate that goes into your total credit score calculation, but that is looking to see if you're at the 30% or lower or 30% or higher. If you're above 30%, your credit score will begin to be impacted and lower because of it. And typically 30% or lower, you will have a higher credit score because you're showing that you're being responsible with your credit card. Now, the main thing is you don't want to pay interest on anything. So why would you carry a balance over every single month and pay 20 something percent in interest? If you're at the lower end, it may be like 14 or 15, but that's still a lot of interest just because you want to build credit. You don't have to do that. That's a lot of interest. I would never recommend doing that. But as someone with exceptional credit, I can tell you paying my balance info every single month has not hurt my credit score. In fact, it helped my credit score tremendously. Whew, that was a lot. All right, guys, so let's get straight into myth number two. Myth number two says to never close out a credit card account. Now, there is some truth to this myth because you never, ever, 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 ever want to close out your very first credit card account, because typically this credit card account is going to have the most history. This is the foundation on which you have built your credit score. So if you go ahead and you close out that account, that can affect you drastically. I can tell you from personal experience, when my first credit card was closed out, mainly because it had to be, it wasn't by my choice, but it was temporarily closed out. Let me state that. What actually happened was my credit card numbers were stolen and someone was using my credit card to buy stuff. So Discover let me know right away that, hey, your credit card is being used fraudulently. Is this accurate? Said yes, and I went ahead and I froze my credit card immediately in their app. Absolutely amazing, pain-free, painless. Contacted them to let them know what was going on, and then what happened was they told me they have to close down the account and they will send out a credit card in the mail and I'll get a new credit card within a week or so, something like that. I can't remember how long it took. But they had to close out my account. So the next month, that was reported onto my credit. And I guess it happened before the new credit card could be opened and everything. But I saw my credit score drop over 100 points. 100 points, because that was my oldest credit card account. It had the most payment history on it. Everything on there was beautiful and perfect, and all of a sudden that was gone. So I dropped from having excellent credit to having fair credit. And again, it was temporary. Everything was reinstated the next cycle around, and my credit score went back to where it should have been. But that was a total wake up call. So again, never close out your very first credit card account. Now, I do have experience in closing out a more recent credit card account. So I don't know what happened. I typically am on my game when it comes to credit cards and making sure that I know what I'm doing. But I was at a dentist's office and they offered me this credit card, and if I sign up, and it will help me with payment, whatever, whatever. Granted, I did have the cash to pay for everything I needed to get done. Fortunately, I had dental work to do. Anyway, that aside, so I just signed up, not even thinking about it. And then the credit card came in the mail, and I saw that the interest rate on the credit card was like 26%. I didn't want it, so I never used it. And in 1 year, literally 1 year, that credit card account was closed. Now, when it did close, my credit score did go down a little bit, but it didn't go down drastically. It basically went down to almost where it was before I got that credit card. So all of the immediate impacts I saw because I had a bigger credit limit due to getting a new credit card, when that went away, it went back to where it should have been, or about the same amount of points that it went up and went down, which was around 10 to 20 points. I can't exactly remember. It wasn't very memorable. But I thought it would be like a huge deal that they closed down this account, now my credit score will plummet. But since it was an account with only 1 year of history, I never used it. So everything was on time, but I never used it. It did not impact me very, very harshly. It did have a little impact, but not a lot. So again, you can close out credit cards. Just make sure you know what you are doing. Don't close out a lot of credit cards, and definitely do not close out your oldest credit card account or any credit card with a substantial amount of credit history. And you need to determine what that substantial amount is based on your credit history. Myth number three that I've heard, which I haven't heard it too much, but I've heard it enough for it to rank in this video. You don't need to use your credit cards. All you need to do is show that you have access to credit. And I've heard people actually making this mistake and having to learn a very hard lesson from it. So, where do I come from with this point? This point means a lot of people tend to get department store credit cards. Me personally, I would never get a credit card for a department store. Why? Because my taste tends to change over time. The stores that I shopped at when I was 18 years old aren't the same stores that I shop at right now at the age of almost 30. Ooh, getting old. Anyway, but the point is if I stop using those credit cards simply because I'm not interested in the items that that store is selling any longer, that is going to have an impact on my credit. When they determine that you're not using it, we're going to close out your account. And that is what happens when you don't use credit cards. So the belief that you don't have to use your credit cards is absolute baloney. You do have to use it. You don't have to carry a balance, but you do have to use it. That credit is available to you, and if you aren't using it, you are taking up that credit line that they can give to somebody else. So definitely, when it comes to department credit cards, again, I personally will never, ever, ever do it because I don't know specifically what my tastes will be like 5 years from now. And beyond that, I don't know if I'm going to have access or immediate access to those stores 5 years from now. Granted, everything is online. Well, most things are online, and it's easy to order items or products from websites. So it's a little easier now than in the past, but still, if the product line begins to decline in quality, or again, taste just changes, or if I have a negative experience with that store and I never ever want to shop in those stores ever again just because customer service was totally terrible, I have to think about it because it may affect my credit once that credit card is unfortunately closed. So that's something to really, really think about. You do have to use your credit cards. Do not be fooled. Myth number four says that you have to open up a new credit card in order to have access to more credit. This is false. Totally false. You don't have to open up a new credit card to gain access to more credit. For whatever reason, people seem not to know. I don't know why, but people seem not to know that you can request. Ooh, almost stumbled on that word. You can request a credit line increase with your current credit card company, and in some cases, they will pull a hard inquiry. Take my experience again. For example, I'm with Discover. I started with them as a student because They had the best benefits for students at that time. And they approved me for $1,000. And eventually, using the app and paying my bills through the app and paying my balance in full on time every single month, great habit to have. They then put this little notification up there saying request a credit line increase. I'm like, won't they pull my credit? No, I was wrong. They did not pull my credit. There is an officer passing by. We're going to wait for that to go by. We're going to continue to wait. Sorry, I live next to a major road. Most of the sounds are filtered out, but not everything. Okay, there we go. So as I was saying, I have a Discover credit card, and I started with them as a student, and they gave me a $1,000 credit line limit. Great. Actually, I thought it was amazing at that time. And then eventually, as I continue to show good payment history, they allow me to request a credit limit increase. In fact, they wanted to know if I was still in school, if my income increased, so that they can offer me more credit. Eventually, I did take it because at first I was afraid that it would put a hard inquiry on my credit, and I'm trying to build credit and not really get my credit score to go lower because I'm trying to get access to more credit that I didn't need at that point. So anyway, I put my information in, and they approved me for like I think the first one was somewhere around a $4,000 increase, which was amazing, and they didn't pull a hard inquiry. So since then, I have put in increase requests like pretty consistently until I got to a level that I was satisfied with. Well, until they stopped giving me huge increases because they don't anymore. And I'm like, whatever. But through all of the increases that I was able to obtain, they did not have to pull a hard inquiry. So that's something for you all to be mindful of. Now, is it bad to have more credit cards? No, you need to have more than one credit card. For example, again, back to my case, when my credit card numbers were stolen, and I was in the middle of moving and using my credit cards for points. So you do need to have another credit card, and I did have another credit card at that point, and I was able to get my cashback rewards, which is awesome. I like to have my money work for me. All right, let's get into the final myth. All right, guys, and the final myth that I'm going to be debunking with you all today is really that credit cards are bad and you should never get a credit card. In today's world, that is the absolute worst advice when it comes to credit. Why? Because I would say in the past, sure, I could somewhat agree with it, mainly because credit card companies and banks really did not go out of their way to basically explain how the APR is compounded and impacts your ability to pay off your debt. Now, the credit cards that I do have, they are pretty transparent with it. If you make the minimum monthly payment, it's going to take you X amount of months to pay it off, and this is how much you are going to pay. In the past, they didn't do that so much. So, yes, credit cards were bad simply because people really didn't understand and they didn't truly have all of the information accessible to them to begin to understand how credit cards impacted them. But in today's world, if you're going to be paying your credit cards in full every single month, as you should be, don't want to pay interest on your purchases, then you're going to get rewards. You're going to get cashback. You're going to get travel points and other rewards that are out there and available to you, which allows your money to begin to do even more work for you. For me, personally, I typically don't buy things that I don't need. From time to time, I do, but everyone has a splurge from time to time, right? But I put all of my regular expenses onto my credit card with the exception of my rent. I wish I could do that, but unfortunately I can't. It has to come directly from my checking account. But everything else I put directly onto my credit card. I'm talking car insurance, phone bill, every single thing that I can so that I can maximize my cashback and my reward points so that it's free and my money is still working for me even though it is leaving me and never ever going to return. So if you aren't going to get a credit card, well, you don't have that no opportunities to get those rewards. And I think that is worse. Once you understand how a credit card works and you are paying your balance in full every single month, credit card can be a great thing. But you absolutely have to be responsible and you have to be on top of tracking your budget if you're going to have a credit card. Typically, it takes a couple days for that total balance to update, at least for the credit cards that I have based on your spending. So I may spend for 2 extra days before my balance updates with purchases that I made 2 days ago. And recording everything is absolutely important because you have to be completely responsible when you do have a credit card. And guys, that's it. That's all that I have. So if there are more myths out there that you've heard or that you think are even bigger than the myths that I've shared, definitely comment below. Let me know what you think. Let me know how you feel about credit cards and let me know how you handle your credit card. Do you pay your balance in full every month? Do you carry a small balance every month? What do you do? What are your habits? Thank you all for watching and don't forget to like, comment, subscribe, and hit the notification bell. Thank you guys. Until next time.